I'm Dr. B, and yes, I'm a real ER doctor. So you may be wondering, what am I doing here in this space? Well, after years of pain from sports injuries, I listened to my doctor and had to pivot into a career that would keep me off my feet as much as possible. I also have a degree in finance, and so it was a natural transition to join Verified Investing. I'll share my prescription for becoming a successful investor right here on the Market Pulse. Welcome to the Market Pulse. I'm Dr. B here at Verified Investing. Today we're going to be talking about swing trading and the differences between day trading and swing trading. Let's get over to the charts. All right, so today we're going to be talking about swing trading mostly, but in general, people often ask, what's the difference between swing trading and day trading, right? In general, swing trading are trades you're taking over days to months, right? That time frame. And day trading, it's really seconds to hours, right? And the idea is that you're getting out by the end of the day. And we'll have another episode on day trading specifically. But I want to talk about swing trading today because it's a bit slower. For those of you who are following along on my episodes weekly, you'll be able to follow this easier. We can then go in and look at the day trading in another episode. So the first question a lot of people ask is, how much should I put into a swing trade? And I made this screen black specifically so I could write. In general, we tend to start with about 1 to 2% of our portfolio when we enter a swing trade, right? And let's say that we need to add 5 times, right? So these are all my different add points. And so let's say we started with 1%. So 1% with our second add, 1% on our third add, 1% on our fourth add, and then 1% on our fifth add. So that gives a total of 5%, right? 5%. So it's a decent size of the portfolio, but it's not incredibly large. Well, some people say, well, Dr. B, why don't I just start with a 10% position in this portfolio, in this stock? I really like this level. I really like this stock. Well, I would say to you, okay, so let's say that we start at 10%, right, for our first add. Well, what happens if we get down here to the fifth add? How much are we going to be in, right? So you're going to add 10% on your fifth add, and now you're at 50% of your portfolio. That's a huge position. You should never be in one stock or one ETF, 50% of your portfolio. That's a great way to take a huge loss and make a big mistake. So in general, stick with the 1 to 2% of your portfolio. In general, the less risky stocks, you can go, say, 2%. The more risky stocks, you can go 1%. Okay, so that's just a general rule of thumb. Just wanted to start there. And let's go to the charts, right? So here's target. So you have all of these trend lines here. This is a trend line that starts back in 2016. You have this pivot high here in 2018, as well as this pivot low here, the COVID lows in 2020. And it takes us right into this level. You also see this pivot low, and you also have this pivot high and this pivot high. And you kind of have all of these trend lines coming into one area, right? So let's say that we were to start our first position, say right here, okay? Well, we could add, say, at this line, and then maybe on this line as well. So we would be in let's say 3/5 position, okay? 3/5 position on target, and our average would be around here. If you didn't see the DCA or the dollar cost average episode, go back to the Market Pulse series and look at the DCA. So you know that your average is here, right? You've added 3 times, 1, 2, 3. So here's your average. You've added 1% each time, so you're 3% of your portfolio in the stock. And look at this major run on target. Right around the $100 mark is where our average would have been. And look at this, all the way up to $180. This stock started to run in early 2024. This is something you could have held for, say, 3 to 4 months and had an amazing gain. In this case, around 80%, right? So pretty amazing. Now, in general, we tend to look for about 10 to 20% on a stock for swing trading. And so, okay, where should I add to my trade? So we talked about that, right? Here's the target chart. You would know where to add to this chart. You would know where to enter, and you would know where to add. Here's another stock, Ross Stores, right? So you have a couple trend lines here. You have this pivot low, these pivot highs brings you right into this level. Let's say that you started a 1/5 position right here, okay? Right in this area. It's a great entry. But let's say the stock didn't roll over like this. Let's say it actually went up into here. Well, the next add level would be based on this trend line, okay, these pivot highs right here, and you can add right in this area for a 2/5 position. Now you know that your average would be somewhere in here. And when the stock did roll over, you would be in the money sooner. So that's a good area to understand where to add to positions, right? You look for the next area of resistance or support, and that usually is a good place to do that. So, for example, this is Dollar General's chart, and you can see this amazing trend line here on the weekly chart. This is 2013, this pivot low. You have a kiss of this level here, or kind of a touch almost in 2016, and then 2017, 2018, you have another pivot. That gives you your slope. And how amazing is this? For people who say technical analysis doesn't work, they don't know what they're talking about. You can see right here, this bounce on this trend line, amazing, from about $100 to almost $170 on Dollar General, just based on one line. So it's very important to understand, how to work with technical analysis, where to draw your trend lines, how to enter into positions, how to dollar cost average. Very, very important. When you learn this, you can change your life. Or your financial future, right? So let's say that you were to, let me just erase this. Let's say that you were to enter into a position right here on this trend line. Perfect. Great entry. You didn't need to add to your position, and you could have, wrote it up here for almost a 60, 70% gain on Dollar General. The other idea here is Dollar General was so oversold. I bet if you pulled up the RSI on the daily or the weekly chart, you'd be under, 30, okay? So amazing bounce on Dollar General. So really what you're looking for is you're looking for good, solid companies that we see every day. As we drive down the road, we see different stores that we go into, we buy things from. We look for good companies that are temporarily unpopular, and then we go in and, we buy that stock, or companies that, are really overdone or overbought. We look to short those stocks. So let's take a look at the next stock. So this is CrowdStrike. This is a parallel channel here. You can see this pivot low right in this area, right? So you have this pivot low, this pivot high, this pivot low, and you can see that the stock came right up into this area, pierced right in here, and then pulled back from about 370 around, 280 it pulled back to. So pretty impressive price drop. What you could have done is you could have said, all right, this stock has made a major move from about $80, $100 in 2023 up to almost $400 in early 2024. This is a great level. And let's say that you started to enter the position right there, okay? Well, you could add right here at this line, and you can even add on a pierce. So now your average is right here, and let's say your average is 350. When it falls down here to 300, that's a nice gain. That's about a 15%, 20% gain. So, and in general, that's what we look for when we swing trade, about a 10 to 20% gain. And you have to be patient, okay? This is the weekly chart. So every candle here is 1 week. So we're talking about several months here, right? Several months from this area until this move actually played out. So you have to be patient. This isn't like day trading where you're in and out in the same day. You're watching this over days to weeks typically. All right, so let's take a look at the next chart here. This is JP Morgan, similar parallel channel here. You can see these trend lines or these nice areas right there, right? That's pivot low, pivot high, pivot low. And look at this. Look at this major pullback from around $200 to about $180 on JP Morgan just because, this parallel was there or this trend line was there. So really amazing when you start to see how this works. And again, this is about a 10% drop on JP Morgan. This would have been a great level to take profits had you entered in that area, okay? So let's take a look at the next. Okay, where should you take profits? We've talked about this, about 10 to 20%, all right? And here's the JP Morgan chart. Like I said, about a 10% drop. That's a great area. And as you correlate this with your RSI, right, if you were to look at the hourly RSI on JP Morgan, you would see that the RSI is probably around 30 or 40 at that point. That's probably a good time to be inching out of these short positions, right? So this is a head and shoulders pattern on AMD, right, big semiconductor company. So you can also swing trade stocks based on patterns. In this case, head and shoulder patterns are very, very strong reversal patterns or bearish patterns. You would look to enter on the break of the neckline here. Let me just change my, So you look to enter right in here, all right? So you have your neckline, upsloping neckline, your left shoulder, head, right shoulder, and you would look to swing this down for about 10 to 20%. You can see right in here, you had a move from about 175 down to 145, right? And what you can do as the price continues lower is you can move your stop losses, lower and lower and lower, locking in those gains so that when it does bounce, boom, it hits your stop loss and you've made, say, 12% on that trade. So there's various different ways to do this. It just depends on your style and what you choose, how you choose to trade. So let's take a look at the next chart here. So this is something that's potentially actionable right now. This is the SMH, or the semiconductor ETF. This includes stocks like NVIDIA, AMD, SMCI, Broadcom, or AVGO. You can see that this trend line here from 2017 came up into this area. The price pierced up to about 240 and then fell precipitously, right? So this is a bull trap. We'll talk about bull traps and bear traps in another episode. But what you could do now is, let's say you miss this initial move. Well, look at this area right here. Oh, let me clear my screen. So if this comes up into this region right here, right about, let's see, 225 area, that would be a great area to enter into a short position. Now, where would you add? You can add right in here. Typically, I like to add around 5 to 10% out of the money. So if I'm out of the money 10%, I add another 1% to my trade, and that will bring my average up. So now I'm only 5% out of the money, right? And so I only have 5% for that stock to fall to be break even, okay? And if the stock falls 10%, well, now I'm in the money by 5%. If it falls another 5%, I'm in the money 10%. So that's the idea here. You have to expect that when you enter a position, the trade is likely to go against you. You have to be ready to maneuver through that. So very good. This is the SMH. This is the level here, right around 225 would be a great area to start a short. And that way you don't need to focus on one semiconductor, right? Like NVIDIA, hey, where's a good place to short NVIDIA or AMD? You could say, look, the semiconductor industry is overdone right now in the stock market. I would like a broad index to short all of them. This is a great instrument to do that. So we'll talk about one other stock here. This is Chewy, right? I think it's dog food and dog treats, things like that. You have this nice wedge pattern here. You can see the price is around $16, all All right. So what you could do is you could enter on the break of this wedge, or you can enter right here, right at the kind of the point of this wedge, and wait for a breakout. And really something like this, I wouldn't be surprised if Chewy, has a good earnings report, a revenue report, or good guidance, and the price comes up here to the 30s or 40s. From $16, that would be almost 100% gain, right? 120% gain. But really, you would look to swing this, say, up into the 50 moving average on the weekly chart, which is around $25, $24. So very good. So Chewy and SMH, keep an eye on those charts. I hope you enjoyed this swing trading episode. It's what we do every day here at Verified Investing. If you want to learn more, look at the links below and you can come learn and trade with us. So I hope you enjoyed that episode of swing trading. This is something that we do every day. Another thing that I also have is a day trading course called the 1 Minute Scalpel. I oftentimes look from a swing trading perspective, on the daily, the weekly charts, and then I zoom into the 1 minute charts and I generate profits most days here in the live day trading room, or the Apex trading room here at Verified Investing. It's about a 3-hour course, and by the end, you'll have a good understanding of how I approach trades, and hopefully it makes you better in the market as it has for me. So I hope you enjoyed that. I'll see you next week on the Market Pulse. Take care.